Thanks a lot for coming in. First of all, I know probably the biggest question we want to ask you, do people need to be concerned after they woke up this morning? I know the stock market's rebounded a little bit, but still after they saw some of the numbers.
Well, I think from a macro perspective, they don't need to be concerned. Now, if they don't have a plan, if they don't have clarity on where they're going and what their financial picture looks like in relationship to what they're trying to achieve, the worry is warranted because they don't really have transparency on where they're trying to be. But from the overall perspective of the market, not a big worrisome moment. The market is going to have some volatility all the time, and so I think things will get turned around.
For those that don't 100% understand, obviously this is all going back to the tariffs. Why did the stock market react the way that it did then this morning?
Well, not the tariffs, yes. You've got interest rates. You've got a new administration. So the market doesn't like uncertainty. And so right now, each and every day, there is so much uncertainty. So the market's going to go up and down and move around. What is Trump going to get passed? Is he not going to get tariff things passed? So until we get some more clarity, the market is going to continue to be up and down.
All right, so looking ahead then, like we said, it has rebounded a little bit as far as the tariffs. There have been some pauses put in place. But still, someone looking ahead thinking, okay, now, is there any way I can plan for this in case it does go south again? What do I need to be thinking?
Well, I think it depends on your stage of life and what point in your financial picture, right? If you're a long-term investor, you go back and look, there's these volatile moments, you kind of stay the course, you make some slight in-course corrections, but nothing major. If you're in distribution phase where you're in retirement and you're starting to spend out of your money, one of the things that we're talking to clients about is really evaluating your fixed income portfolio, the bond portion of it, because with interest rates, there's some opportunity there with tax loss harvesting and how you can manage that. So we're managing it, looking at it, evaluating it, but not making just decisions off of emotion in this moment because of some uncertain moments that we're in.
Okay, so you talked about those that are kind of in that retirement phase. What if I'm new to this, new to the markets, new to investing? What questions should I be asking myself when I see something like this? What questions should I be asking somebody like you?
Well, I think the biggest piece is to sit down and not be afraid to ask those questions. So many people, when they're new investors, they're thinking, I'm not quite there yet. I don't have enough money, or I can do this on my own. I really just have to be humble enough to go ask the questions, but then really find somebody that is going to coach you, advise you, give you all the different aspects of the market to then help you make the best decision that warrants or that fits what your financial picture is trying to become.
Okay, and on that note, I'm sure we'll be talking again, but Mark, thanks a lot for coming by.
Thanks for having us.
All right.